Hello, and thank you for joining us on the Ask Andrew show today, Canada's first Facebook Live streaming family law question and answer show. My name is Andrew Feldstein, and I'm the managing partner at the Greater Toronto Area family law firm, Feldstein Family Law Group. I practice exclusively in family law in the province of Ontario. Today, our special guest is Toronto Chartered Business Valuator, Paul Mandel. He's also a chartered accountant as well, and we'll be discussing the impacts of divorce on businesses. Please feel free to ask questions in the comments section on Facebook Live, or you can text us your questions as well. Also, today marks the one-year anniversary of the Ask Andrew show. We're celebrating the occasion with a few special guests after our interview with Paul. We hope to see you there. Let's begin. Paul, what are the most important factors to look for if you're a business owner and going through a divorce?
Well, Andrew, first thing, thank you very much for having me on the show today.
Our pleasure having you.
I'm delighted to be here. So with respect to your question, what do business owners have to deal with when they're going through a divorce? Because they have more complicated financial affairs, they have to let their lawyer and the lawyer know about their business affairs and to disclose all those issues to their spouse.
And in your experience, when you have clients come in who are business owners, how do they feel about the prospect of giving that disclosure to their spouse?
Most are not happy about it, Andrew, and they often ask me the question, is that necessary? Do I have to show these documents to my spouse and her lawyer?
And what do you usually see are the type of documents that a business owner will have to give to their spouse?
Okay, so that's a very good question, Andrew. A business owner would have to share regarding their business. So the one key document that we prepare, that all business owners prepare, is what's called a financial statement. And they would have to share that financial statement. That's a statement that includes the assets, liabilities, and the income and expenses of the business, as well as, and that's the basis to prepare the corporate income tax return for the business. So those are the key documents that a business owner would have to share, and that would be his past financial statements and his past tax returns. But often, accountants and spouses will want to know what's behind those financial statements and that information to verify its accuracy. And what's behind there would be bank accounts, credit card statements, invoices, and a document called the general ledger. And that's the account, what all the accounting information is stored in.
Okay. And do you find that the general ledger usually needs to be produced?
It depends. So everything in the general ledger gets summarized in a financial statement. It would depend whether the spouse is concerned about really what's behind those financial statement information, and do they want to look at what's behind. So I'd say in the cases I see, it's often disclosed and people are often looking at it. But it's the first document you look at is not usually the general ledger.
Now, I will add for the audience, there's occasions that I've worked with Paul where my clients have hired him as a business valuator. And there's occasions like right now where we have a file and we're on opposite sides of one another. And I think where I'm going with this is, do you see that different lawyers have different styles? And what is usually your role when you're hired by a client or by a lawyer to be involved?
Okay. So lawyers will often hire us to answer two questions in the matrimonial context. One is to determine what the value of the business is, the value of someone's business is for equalization purposes. And then the other question they'll ask us is, how much money does the person make, so that we can determine how much spousal and child support they make. And we can start with the financial statement and the tax return when we're going through those exercises, or we could drill down just to verify the information. And it depends on the circumstances or facts of the case, whether we feel that we can rely on those original documents.
Well, I see in my experience, a lot of times you see the business owner says, these are my financial statements, these are my tax returns, and I did everything by the books. It's right. Why do you need any more information? And the spouse, who is the non-business owner, will say, well, hold on a second. You did a lot of cash and you wrote off an incredible amount of personal expenses through the business. And then they want somebody like you to review the other side's report and to deal with it. How do you deal with that? And how cost effective can you be in that type of process?
So we call that like a rebuttal analysis or a rebuttal report. And that's really reviewing and verifying the information. And Andrew, you're right. There's two questions we kind of often want to ask. Business owners will often use, in accounting terms, they don't talk about all their revenue. They don't, and the way they can do that or not declare the revenue is by having cash income and not putting it on their income statement and not reporting on their tax return. And there's an advantage to people to do that because they don't pay tax. No one ever tells the government that they made more money than they actually made. They'll only tell them that they made less. No one wants to pay more tax. The opposite would be with your expenses of running the business. If you include in expenses, which are what we call lifestyle expenses, a car, travel, meals and entertainment, have the business pay for those, you get to pay for them in pre-tax dollars and save taxes. So in a matrimonial context, we're always concerned, is the business paying for lifestyle expenses? And if it is, that's really an extra income, if everyone, as compared to other people who would have to pay for those items in after-tax dollars. So we often, Andrew, that's part of the exercise in determining someone's income is to verify whether and examine if the possibility of unreported income exists, or are there included in all their business expenses, are there personal or lifestyle expenses?
So I think what you're saying is if somebody decides to book a trip to Hawaii with their spouse and they spend $20,000 and they put that through the business as travel expense, that's something you would look at and say, well, that's not a business expense, that was personal.
You're absolutely right, Andrew. That's not a business expense, it's personal. So we'd have to identify that and add that back to the person's income, not only for determining how much child and spousal support they should pay, but also the value of the business, because the value of the business often correlates directly with how profitable the business is. A more profitable business would be worth more than a less profitable business. And for your example, Andrew, if you had $20,000 of extra profit, that means you're earning $20,000 more and your business should be worth more. And it could be worth multiples of $20,000.
And on the income side of the business, wouldn't it also impact income more than $20,000 when you're trying to determine his income?
Sorry, can you say that again, please?
Okay. Wouldn't, if in that situation of the person who wrote off the trip to Hawaii for $20,000, wouldn't that mean that the income that's going to be attributed to them would be more than $20,000 for support purposes because of taxes?
Correct. So when we determine income, we determine it on a pre-tax basis. So there's a chart that the government puts out called the Federal Child Support Guidelines. And it's basically a grid that says if your income is a certain amount, and here's what you pay if you have 1, 2, 3, 4, 5, or even I think it goes up to 6 kids. And it tells you how much you pay. The higher your income, it's just a different box on the grid. So if you're adding income, if your business is paying for items and we're adding back that $20,000, on top of that, as compared to someone else, they would actually have to earn more than $20,000 to have $20,000 in their pocket to pay for their trip to Hawaii. And that concept of it's called grossing up or increasing it. So not only increasing the amount to take into account the tax savings. So not only do we add $20,000, but we add the effective tax savings to their income.
So if they were in the 50% tax bracket, that would be approximately adding $40,000 of income to them for support purposes.
Correct, Andrew.
Okay. Now, I see that we have a question that came in on Facebook Live, which is, I think my husband is lying on his tax returns. What can I do to make sure that the taxes properly reflect his business income? Can a business valuation help with this?
Yes. Okay. So just in line, Andrew, with what we've been talking about, the question sort of asking, I believe that the financial statements and the tax returns are inaccurate. So we can go through as accountants and valuators and review the source documentation to see if that individual and that business is reporting all its revenue or expenses include personal expenses. We tend to not find that people don't don't claim all their expenses, because that would increase their taxes.
Okay, now, how do you find when a business is doing cash? Because that's a common question that I deal with. The wife or the husband, the non-business owner, will say, my spouse does a lot of cash. And the spouse will say, no, the only cash I take is reported in the business and I have no other cash.
Yeah, I mean, Andrew, we could spend, that's a question for 3 Ask Andrew shows. But the big thing about, we call it, is means and opportunity. If you're an employee and you get paid by your employer, there's not really an opportunity to earn cash. But if you're in a business where people come in, they pay you cash, and they're not asking for receipts, there is that opportunity to cash, and that's where the red flags would go on, that we should look more carefully. So it really, industry and means and opportunity matter a lot.
Okay, it's almost a smell test on a common sense basis, which is what I know. I tell clients, when you hear somebody as a general contractor who does work in the basements of people's homes and they're doing consumer to consumer, there's a lot of opportunity for them to do cash versus a contractor who just does work for businesses, renovating offices. That person has a lot less opportunity because you assume the businesses want to write off the expense of the renovation.
That's correct. So if your customers are individuals, you have a means, right? If your customers are businesses aren't going to pay you cash. They're going to ask for a receipt so they can expense what they paid you on their financial statements.
Okay, now I have another question on Facebook Live, which reads, when does an appeal from a family law order get filed to the divisional court? When does it get filed with the Court of Appeals? That's a question really that's for me. Unfortunately, I will say this every time I deal with an appeal. I always like to sit down and understand exactly what the appeal is and read through the rules of civil procedure in order to determine which is the right approach between Court of Appeal and divisional court. So even though I'd like to be able to help that person right now on the Ask Andrew show, the practical reality is appeals can be very complex, and it requires reviewing the order to see what it is and to look at the rules of civil procedure and identify what the right steps are. And for the viewer that asked that question on Facebook Live, or I believe it came in through a text message actually, they need to go to the rules of civil procedure. The best thing they can do, though, is hire a lawyer and get the lawyer's help. But if they're not going to, read the rules of civil procedure, and you need to figure it out based on the order you have. I apologize for interrupting the flow of our Q&A, Paul.
No, Andrew.
I can tell you, I mean, I know in my experience, I've seen some situations where some business owners have been really flagrant in what they write off and how ridiculous it is. I always remember one case, the husband declared $50,000 of income, and the income report we got was close to $500,000 because he wrote off his mortgage. He wrote off his ex-wife's mortgage as interest expense in the business. He wrote off all his shopping at various high-end furniture stores and all sorts of other things. Is it very often that you see such flagrant mislabeling or misidentification of business expenses to go from 50 to 500,000 of income?
It does happen, Andrew. We joke in the office about what's the craziest things we've seen. We've seen all the dog bills, veterinary bills, because the dog is the longest standing employee of the business. We see trips. We see people.
So that's why you put pictures of the dog on the website?
Even that, it's not a business expense, Andrew. We see where it's everyone in the family's car. It'll be the entire gas bill, the entire insurance bill, the home internet. It'll be every single restaurant bill. So the big one we like is that if you go to a restaurant on Valentine's Day on a Saturday night, which for 2 people, it's probably not a business expense.
So you mean I wouldn't be taking you out on Valentine's Day?
No, but if you see, and the other one we get is we see Subway sandwiches, $9. So nobody takes a client to Subway and buys 1 sub. They buy 2. Car expenses, boat expenses, home renovations you brought up. You just get certain people, they just put through everything. On the other hand, Andrew, we see lots of clients that are very clean. Everything is by the books, and we deal with them. Like in our office, we deal with them in a matrimonial context and a lot of times in a business or commercial context. And a lot of people are straight by the book and everything is legit. There's no one on payroll that doesn't do things, that doesn't actually work there. They don't have the family members. They're not putting through their home cleaning bill. They're not putting through cleaning supplies or their grocery bills on the business. And then we do the opposite, like the example you brought up, Andrew.
Okay, because I know it's a fascinating business, because sometimes you will see people, as you say, who are very clean, and then you will see other people, like the example I gave when I looked at the whole barrage of personal expenses that individual was putting through the business. It actually became somewhat laughable and comical. And what clients may not appreciate, and when I said this to the other lawyer, I go, you have to settle this case. You can't take this case to a trial.
Yeah.
When there's a trial, a judge will typically write written reasons, and those written reasons will typically be typed, and then they'll be typically reported in places like Westlaw and Canley. That means in that situation where somebody's income jumped from 50 to 500,000, they're now in a position of it being out there in the public domain for anybody to see. And that's highly problematic for that particular type of guy who is in that situation. And I've often said to clients to consider voluntary disclosure when it looks really bad for them, because the only way to counter that risk of it ending up in the public domain and you can't settle is go make a voluntary disclosure to CRA and pay the taxes on it. And one of the things people don't realize when they come clean is there's a very strong argument to say at the beginning, if I went and I made my voluntary disclosure, that those taxes should be considered owing at the date of separation, which means through the equalization process, your former spouse is actually going to pay half of them. And now you're reducing that fear that you may get audited after you make a deal for years that occurred during the marriage, and you can't come back on your former spouse. So there's a real advantage to considering a voluntary disclosure when you played a lot of games and you're worried that CRA may see it. And I don't know how you feel about that strategy, Paul.
Yeah, I mean, that's a real live issue about, I've gone my whole career, I've put through a lot of personal expenses, I've understated my taxes, and now I'm going to come clean, and we can measure the amount, and that would be an equalization payment. That would be a credit on the NFP.
So in a sense, you have this one-time opportunity to clean up the mess you've potentially created and get your spouse to pay for half of it. Because after you make that deal, you can't come back at your spouse. If you get audited again or audited for the first time, that's your one kick at the can. Otherwise, you're going to lose. And if you read the newspapers, the current government is hiring more auditors and they're looking. And if you've been playing these games, there's a high probability you may get discovered.
Yeah. The other part about, Andrew, is when we sometimes deal with these issues around support, and we talked about the gross up, is you get individuals that in order to pay their support, they're going to have to continue to have that behavior and to continue to not report all their income and overstate their expenses. But they say, I'm going to come clean now, then you can't expect that behavior and you can't gross it up on a go-forward basis.
Well, it's interesting you say that, because I remember I had one case where the husband was saying he was going to come clean, but yet the year end after he said he was coming clean, he didn't come clean. And I've had the same discussion with my clients that you need to come clean. But if you're going to say you're going to come clean, you better make sure you come clean before you go to court. Because then you can say, look, I'm not just doing the talk, I'm doing the walk. I realize this risk factor. I want no part of it anymore. I want to be able to sleep at night. I want clean statements, and I want to pay my spouse what I should pay my spouse. And my point is, if you're going to do it, make sure that you do it. Don't just say it to a judge, because a judge probably hears that story every day from payors. I'm going to come clean. It's no different than when a payor says, my income is going downhill, I shouldn't pay as much support. I've had judges say to me, Mr. Feldstein, do you know how many times a day I hear someone say their income is going down who's self-employed? So you got to realize that when you're saying your income's coming down and you're going to do something, you better have good evidence to show it, and don't just say it. So when someone says their income is going down, it's good to be able to say as a business owner, look, I lost this one customer. They represented 40% of my revenue. If you have that, you have a better chance of succeeding. Would you agree with that, Paul?
I do, Andrew. I do agree with that. We often get, I call that a bit bias. Like, everyone has bias about how their business is going to be. And people tend to, when they're going through a divorce, they say the whole roof's collapsing in on me and all my customers are leaving. And then a year later, they're still there.
Now, you and I are almost out of time, but we just had a question that came in on Facebook Live that I think is appropriate for you. If my partner and I are preferable to making honest financial disclosure and we both own businesses, do we really need to hire a business valuator?
I mean, the answer is still yes. So most of the time business valuators get involved. It's not involved in the context of someone whose financial statements are inaccurate. The financial statements are accurate. The parties do disclose all of their sales and their expenses are properly stated. But we still have to figure out what the business is worth to determine the proper equalization payment.
And I think what people don't appreciate is if you take two businesses, and one business owner may have a business with goodwill, another business owner may have no goodwill. I'll give an easy example. My business, I'm a divorce lawyer. I know business valuators like you will typically say, well, the goodwill you have in your business is personal goodwill to you, Andrew, and your clients don't come back repeatedly to you because hopefully they only have to go through this once. So you really don't have any goodwill in your business. And I can contrast that with my brother, who's a chartered accountant, who has clients that come back to him every year for their year ends and their tax returns, and he would have goodwill in his business. And if you're a layperson who says, well, you have your business, I have my business, and the retained earnings are similar, what do we need a valuation for? Well, the difference may be that one business has goodwill and one business doesn't. There may also be adjustments for tax purposes. Would you agree with me on that, Paul?
I do. So, Andrew, first thing, maybe I should talk about what goodwill is. Goodwill is the intrinsic value in excess of the tangible value of the business. So, and you brought up the term book value. So book value is the number that it says on your financial statements it is worth. That's the value of all your assets less your liabilities. It's what's left over. But most businesses can sell for more than that amount. And that premium over the value, we call that goodwill. And goodwill really is the ability to make money with that while sitting on, I say while sitting on the couch or sitting on the beach. So if you've got a machine or a business that can make money while you're not there, and it just turns and makes money, such as internet sales or a store that even when you're not in there, you're selling products. People are coming in to buy your store, buy stuff. It can have goodwill. Whereas if you have to work on every single contract that you're going to do, and it requires your personal involvement, and you're not there, and the business will stop automatically or grind to a halt, then there isn't goodwill. That's the general concepts on that. So when you're a business owner, you actually want goodwill. You want to have high value for your business, except for people that are going through a matrimonial and they have to make an equalization, then they don't want any goodwill. So we can't do, the one we always ask is, there isn't such a thing as, well, here's the valuation if I'm going to sell my business, and here's my valuation for divorce. Right? Goodwill is what business valuators measure. We'll go through and we'll give an opinion whether there is or isn't goodwill in your particular business.
Okay, we're out of time now, Paul. I wanted to thank you very much for coming. Paul Mandel is a partner at Collins Barrow Chartered Accountants. He's a business valuator there. We have his contact card will be up on the screen. So if you want to reach Paul Mandel directly, please feel free to. As I said before, I've used him as a valuator and I find him very good. And I've been against him and find him to be a very difficult opponent to deal with. And thank you for coming on the show, Paul.
Andrew, thanks very much for having me out today.
And have a good afternoon. Now, this show, as we said, is our 1-year anniversary of being on Facebook and live and on YouTube. So we have some special guests that we're going to be bringing on the show today who make the show happen. And it's my opportunity to say thank you to them. I'm going to start with welcoming Mark Robbins. And his firm has been instrumental in working with us, probably, I think, maybe 10, 12 years now, doing our SEO, our brand development, helping us with our blogs, our websites, and they've really helped us progress. And they've been very important because for those of you who have been on separation.ca or familylawhelp.ca and watch the Ask Andrew show, one of the things here at Feldstein Family Law Group we've been committed to is educating the public and giving information to the public to help them and guide them through the process of divorce. Welcome to the show, Mark.
Thanks, Andrew. It's really good to be here today, especially considering we're celebrating the completed second season, our first season on Facebook Live with the Ask Andrew show. It's been just a heck of an experience for everybody involved. At LawyerLocate and Digital M Space, we've been very proud to work with you, Andrew, and your firm, Andrew Family Law. We've developed your brand, as you know, and my partner and the founder of LawyerLocate.ca and M Space, Natalie Waddell, who unfortunately isn't able to be with us today, She's just thrilled at how we've grown this whole practice for you from where it began. We looked back the other day in the Wayback Machine to look at some of the original website designs we did for you. And you're right, it's about 11 years ago that you started with us. And I'm not going to bring them here. I didn't pass them along to Rob to pop them up as a surprise, but some of them were pretty interesting stuff. But let me ask you something, Andrew. Since we started doing Facebook Live, what's been your experience with the feedback from the public?
Well, the one thing that I can certainly see is that viewership has gone through the roof. When we did the show last year, and we did it just on our website, YouTube, a good show had about 800 viewers or 500 viewers. I can't remember. The numbers were not the same. Now we're seeing viewership after the show surpassing 20,000 viewers in the last couple of shows. So obviously, it's been a much, much better format for us. And we really appreciate the hard work that you and Natalie have both done in developing the show, along with the other guest who I didn't introduce yet, being Samantha Collier, who helps us with the Ask Andrew show and does all of our social media work on Facebook, on Instagram, on all of a sudden I'm Twitter and LinkedIn. And I know that Samantha's made my daughter upset because I have a lot more followers on Instagram than she does. And then I also wanted to introduce Rob Hicks, who's the man behind the scenes. And he's been working with us on the show to make the product what it is today. And I want to thank each and every one of you that have worked so hard to make this product work.
Thanks, Andrew. We appreciate it. The crew and the professionals that we put together at Digital M Space to produce the Ask Andrew show, we picked these professionals very carefully. We picked Samantha. We've worked with Samantha for a number of years. As a matter of fact, Sam, when she unmutes her mic, she'll tell us about maybe how we first came to know each other, and we helped her along to become this obviously social media maven, as I refer to her. Rob Hicks is just a consummate professional. He's the man behind the curtain that we don't see, who makes all the magic and does all the lower thirds and keeps us honest and keeps you, Andrew, doing what you're supposed to do on the show. But Samantha, maybe you could tell the audience a little bit more about what you do to help Andrew Feldstein get his message out.
Yeah. First of all, I just want to say it's been a pleasure working, with you, Andrew, with you, Mark, and everyone. And Rob, it's been great. I actually looked it up, and the date I started working with Andrew was June 18th, 2014. So it's been just over 3 years, which was pretty amazing, I think.
Well, time flies. I didn't realize it's been 3 years now.
I didn't realize, I knew it'd been years, but I actually looked up our contract date, and this was the date. So it was pretty cool to see. And working with you has been incredible, and LawyerLocate and M Space, because you were always on the cutting edge of social media. So a lot of lawyers are not just lawyers, professionals are very reserved, and you are reserved, but you weren't not afraid, but you were always on the cutting edge of having, like the Ask Andrew show and all these things. So you're always my best example, of a lawyer using social media. So it's been, and I'm not just saying that because I work with you, I really mean it. So I just looked it up, and to date we have 28,000 likes on Facebook, 8,500 on Instagram, 42,000 Twitter followers.
Wow.
Just under 500 YouTube videos. So, and this is growing, over time. It's not like just, 30,000 over a year. It's slowly gone up and up. And you actually get people asking family law questions on Facebook, which is always shocking, because most people don't think, oh, well, I would never hire a family lawyer through Facebook. Well, now everyone's asking questions back and forth, and people ask questions on your page all the time. And as a social media professional, I measure success based on the amount of engagement that comes through the page. And with the show, it's just gone through the roof. Like I remember in the first shows, we didn't get hardly any questions. Now we get so many questions that it's hard to even have the half-hour show, So to me, it's just been, I kind of rambled a bit, so I apologize for that. But it's been great.
No, that's fine. I'm very happy with the numbers that I see on all fronts of social media. And I thank you for that hard work that you do, because it's really important to getting the message out. And I always like it when I bump into people and they say to me, I don't know how you do it, Andrew, but I'm always reading your stories online, or your articles online. And I know that's you pushing it out, whether it's on LinkedIn, Facebook, Twitter, people are seeing it. And that's important, because that means when people see it, they're getting information, they're passing information on to their friends and family that may need it. And I like to try and help people that way to give them a little bit more understanding and a little bit more information.
And Andrew, I just want to touch base a little bit more on Rob Hicks, because he's like I say, he's the magician behind the curtain, and Rob's done probably in excess of 650 Facebook Live, YouTube videos. I've seen he's working on some video postcards that he's doing now for businesses, which are really amazing, and we will be looking into that actually for yourself. But Rob, he's taken us to a place that we needed to be with the show. We needed to be a polished show and something more professional. We never wanted to be a studio show, because as you and I know, when we discussed what was the idea about Ask Andrew, it was never to be so polished that it was CTV, because that wasn't going to help you. It wasn't the market, and it's not the demographic that you want to reach. People want to talk to Andrew Feldstein. They don't want to talk to some guy with his tie tight and everything's polished and everything's formal. They want to know that they sit across the desk in your office with their heartbreaking family problems, that they're getting a real person. And I think now you've delivered that with the Ask Andrew show. And like I say, with Rob Hicks behind the scenes, that's just pulled it all together for us.
Well, thank you for those kind words, Mark. I'm not sure if Rob wanted to come on the air and say any words to the viewers. The viewers may not. The viewers can't really see him in the background, but he's declining. But Rob, I wanted to say thank you for all your hard work. It is much appreciated. All the hard work from the three of you and Natalie as well, who's not here, really is appreciated, because I know the show wouldn't be able to work without all the work you do in the background. That being said, I don't know if there's any other words any of you wanted to add, because I wasn't sure on the end time today. So I think it's probably a good time for us to wrap up today's show. If someone wants to request a certain topic for a future show, please feel free to email us at info@feldsteinfamilylaw.com or message us here on Facebook with your ideas, because we're open to hearing ideas. And in addition to that, I want to let you know the next Ask Andrew show is going to be September 20th at our usual time of 1 p.m. So I invite people to watch it live and ask their questions when it's live, or like many people do, watching it after the show at a time of their convenience. So thank you for watching, and have a great afternoon.